Good morning, traders. It's the 24th of January. I'm Joe Neighbour from Signal Centre talking bull this morning. Hope everybody's doing well. Streaming live on TradingView, so if anybody wants to get involved in the stream today or via YouTube, then please feel free to post up your comments. Let me know what charts you're looking at, what markets are of interest to you this week, and I'll do my best to cover as many as I can from a technical perspective. Also going to run through the latest headlines in the markets and what's been moving price action over the past 24 hours. So we'll take a quick look at that before we get into some charts. So yesterday we had further ECB rhetoric, hawkish rhetoric from the ECB, sorry. One of the council members stated that the central bank should deliver two more interest rate increases at 50 basis points in February and March, despite an easing of inflation pressures. The Bundesbank, which is obviously the central bank in Germany, in its latest monthly report stated that the economy likely stagnated in the fourth quarter of 2022, but this was a better performance than expected previously. The central bank also noted that the recent indicators have been better than expected, while stressing that the energy markets and easing of the supply chain bottlenecks are slowly dissipating. We've got PMI business confidence data today. We've got the latest from the Eurozone, the UK and the US all coming out with PMI data today. And it'll be closely watched to assess the overall economic outlook and the relative outlook for major economies. The consensus forecasts are for the Eurozone sector service to edge into expansion territory with further contraction for all other components. So when we look at these PMIs, it's the 50 number that we're interested in. Above 50 suggests we're in expansion territory, below 50 suggests we're in contraction. We saw further strength from equities yesterday, particularly in the US. The US indices posted 6-week highs amid hopes for a global economic rebound. We saw the dollar continue to drift lower, posting limited net gains at times on Monday, but unable to sustain those gains, especially with fresh buying for commodity currencies such as Aussie and New Zealand dollar. The UK borrowing has surged, the government borrowing that is. The borrowing requirement for December surged to 27.4 billion from 10.7 billion in the previous year. That's the highest December deficit on record. There was a surge in spending on energy support schemes and debt interest payments that also increased. And again, it is a Chinese holiday all week this week for the Lunar New Year celebrations. Okay, let's get stuck into some charts and have a look at what's moving on the price action side of things. Let's start off with cryptocurrency and have a look how that's shaping up. So just get the Bitcoin chart up here. So this is the daily chart on Bitcoin. As mentioned yesterday, prices broke through that 21,555 level with a really strong push higher on Friday. And since then, prices have stabilized, continuing to grind higher ever so slightly. But given that it's had such a dramatic rise in a fairly short space of time, I wouldn't be surprised to see some sort of pullback on the in the short term on this one, maybe back to test this newly formed support at around 21,555. But ultimately, I think the price action looks pretty constructive. And as I drew on yesterday, maybe we're in the process of forming some sort of large bottom pattern on cryptocurrencies, particularly Bitcoin. So that all looks pretty good. I think if we can get above resistance here at 25,338, then really we do have a really nice bottom in place, and we can start looking for much higher prices over the medium to long term. But of course, this needs to be supported by risk appetite elsewhere. We'll come on to the equity market shortly, but let's take a look first of all at the FX markets and focusing in on the US dollar. So the US dollar continues to move lower. So that suggests that money is coming out of safer haven plays like the US dollar, and we're continuing to see this grind lower as equity markets continue to hold up quite nicely. We know that the S&P, as we've talked about in recent days, has been lagging. It's been into that downtrend resistance line. We'll come on to that because there's been some interesting developments there. But we are fast approaching a major level of support here on the dollar index. As you can see from the left-hand side of this chart, this previous low here from May 30th, where we actually gapped higher. So there's an unfilled gap there. That's at 101.29. We're getting quite close to that. We also had a 50% fib level in yellow there. And prices stabilized a touch around that level, but in the last few sessions have closed below it and appear to be moving lower. We've got this head and shoulders top pattern on the dollar index. The measured move of this target, taking the measurement from the head to the neckline projected lower, comes in at 95.90. So we are still looking for lower prices here, but there are some important support levels along the way that may provide some temporary relief. We've also got the psychologically important 100 level, not massively a technical level by any means, but psychologically they often can provide support, these big round numbers. So we'll be keeping watch for that as well. And then we also have a 61.8% fib level in red here, which is at 99.18. Okay, let's take a look at Euro US dollar. So yesterday, a bit undecided. We posted a doji candle, having made new highs on the session. We gapped higher on the Sunday night open on Euro US dollar, pushed to new highs, coming up just shy of a 50% fib level. And prices then closed below this previous high that was posted on Wednesday, the 18th of January. So a little bit undecided, but all in all, as we can see here, the trend is pretty strong and it's looking pretty robust indeed. So we have seen a fill of the gap on Euro US dollar, so that's nice from a technical perspective and suggests that we may continue to see higher prices here on Euro US dollar. But do bear in mind we've got this 50% fib level slightly above at 109.42. Let's take a look at cable. This continues to hit its head on the resistance level at 124.30 as highlighted here in blue. We can see it was a low here, then we broke through that level, then we've retested it on a couple of occasions and failing to break through it at the moment. So yesterday we posted a doji type candle, having made a new high. So maybe that's even a swing failure actually on the daily chart where we made a new high above this previous high here, but actually closed below that level. So that may indicate a small pullback in the short term. But all in all, price action is pretty constructive. You could argue we've got a big bottom pattern forming here. Maybe this being something like a left shoulder, this being a very deep head, and then this being a right shoulder. If we can break above this blue line, which is now a neckline, then that may suggest much higher prices for cable or sterling US dollar over the medium to long term. Let's take a look at dollar yen. This, as we know, has been trading in this bearish channel. And yesterday I took a look at this for an intraday trade for my gun to the head trade, expecting it to continue to be contained by this channel. And yesterday we actually saw a break out of that, but we have rallied into these major resistance levels here at 130.39 to 131.25 and reversing a touch today. So not straightforward by any means in terms of how that is trading, and technical analysis isn't always deadly accurate, but yeah, didn't go too well for me on that trade yesterday, but is off again today, looks to be heading lower. So a couple of requests to look at some yen based pairs, so I'm going to do that. I'm going to take a look at CAD yen to start with. So obviously we saw a big move lower in a lot of the CAD currencies. So this was CAD strengthening because CAD is the secondary pair here. Sorry, yen is the secondary pair, so CAD is the primary. So if it's moving up, suggests that Canadian dollar is strong. Moving down suggests that Japanese yen is strong. Now, if we take a look at this on the daily, we can see that a large top pattern formed here, and then we saw the breakdown on the 1st of December. We then saw a continuation pattern form before a further breakdown, and we are still trading in a sequence of lower highs and lower lows. We can see here that each time the move lower has occurred, we have seen a fresh low, and the rallies to the upside have been contained below the previous highs. So that is the classic definition of a downtrend. If we look at price action over the last few days or so, we can see we posted this hammer type candle here on the Thursday, the 19th of January, and prices from then have continued to move higher. So where are the resistance levels on this? Well, we've got a number of sort of lows of these candle wicks in here that may provide some resistance. If we take a look at the low just prior to the big move down, that's at 98.30. I always like these levels and think they do a pretty good job of providing resistance. So all in all, still, I think, looking for lower prices on this. Let's take a look at the 4-hour chart to see if we can find any particular levels that are interesting from a short-term perspective. So again, this just highlights the lower highs and lower lows. I've got a volume profile on here as well. So this is the last 20 days worth of price action, and basically tells you where the price has been the most, or where the most volume's taken place, and we can see that that's down here. So the move higher suggests that maybe we could see a pullback to this level at some point. We have seen a bit of a failure in here from the candle closes rather than the spikes that we saw. We've rallied into that level, and we are starting to maybe roll over a bit to the downside. So I think the bias has to remain bearish on this for the time being. But obviously we have seen a fair amount of volatility on these yen pairs of late. Let's just see if there's any kind of channel that we can maybe have a look at. So it's not exact. I mean, ideally, we'd like to see a good few touch points on this, but this looks to be reasonably reliable. And yeah, prices look to be heading lower. So I think I would be looking to sell into strength. If I was going to pick a level today, I think I'd want to go a little bit higher up, maybe somewhere around there. I want to be challenging the upper ends of these channels because I want to get into any kind of trade that I do at the point, the closest point to where I'm going to be wrong. So if I think about this from a trader's perspective, if I was to sell into that level there, I'd have a fairly tight stop loss. I mean, I could go above these highs here, but for a bit of safety, I'd probably want to go above that high on the left-hand side. But then do I have other concerns here that we've got these two lows here that have previously been a resistance? So maybe I want to go even a little bit higher than that. But then in terms of the target, I think a natural target would be to look for a move back to the volume point of control, because typically this, as I say, this acts as a bit of a magnet in the market. So I think maybe selling into rallies up to that kind of level, targeting a move down there would work quite nicely for me. Or also would be at the upper end of that channel and maybe just looking for a slight false breakout above that to sell into, because that's very close then to the point where if we do get a break of the channel, we're probably going to be wrong on this idea. So hopefully that helps on CAD yen. Let's take a look at Aussie yen. That's had a pretty significant move as well. Let's just go back to the daily just to put things in a bit of context. So this is the daily chart. I've got a large head and shoulders top pattern here that I've got drawn on the chart. Was looking for lower prices, slightly different from the CAD yen setup here, in that if we look at the price action here in the shorter term, we can actually see a sequence of higher lows and higher highs. So that's actually quite encouraging. We haven't quite made the latest sort of higher high. We've got a resistance here at around 91.82, but we failed into that today, and that's roughly where the neckline is of this head and shoulders top as well. So I want to be a little bit careful here, I think, but we've seen two massive up days on this. So really getting a chopped around quite a bit on this at the moment. So let's take a look at the 4 hour. Yeah, bear in mind, I think my bias is still bearish on this, given that we've got that massive head and shoulders top pattern. Let's take a look at price action here on a shorter term basis and over the 4 hours. So immediately I'm drawn to the fact that we've got these highs in here, which are acting as resistance. And as we can see, price has failed at this level. We posted a doji candle having attempted to move high. We actually made a marginal new high here. That was at 2 o'clock yesterday afternoon. And then prices are starting to roll over to the downside. The volume point of control isn't that far away. So from a risk reward perspective, if you're targeting that, it's not particularly great. So maybe what you'd want to target is something a little bit lower down in order to make that risk reward a little bit more favorable. So if we're looking from a trade setup perspective, we've got these highs here. We've also got a high over here on the left-hand side from the 19th of December. So I'm going to put a stop loss as a suggested stop loss, just a little bit above that. There we go. If we move to the volume point of control, we're only getting 1.1R. So maybe we want to look for something a bit deeper, maybe back down to these lows that we posted on Thursday last week, at which point the risk reward is far more favorable at around 4-1. So that could be worth a watch as well. And then finally, let's take a look at sterling yen. Again, go back to the daily chart just to have a look at how that's shaping up. So price action has been very choppy here. We did make lows down here in early January. We tried to revisit those in mid-January, but then bounced quite sharply. So price is pretty sideways, pretty choppy, seemingly finding support around this 61.8% fib level. We do have a major resistance here at 163.15, which is a previous low that we posted back in November. So that may provide some resistance in the short to medium term. So let's take a look at the 4 hours, see if there's anything shaping up here. Pretty much at the volume point of control at the moment, so hovering around that for now. Let's see if there's any short-term resistance. So we've got, I guess we could go away over here, and I'm cutting the wicks off of the candles here, just going by the closes. which you can do. It's a preference thing. Sometimes I do, sometimes I don't. It just depends how it suits the trends that I'm looking at. So yeah, into some resistance here, maybe chance for a potential pullback. We can see here that we've got this previous resistance, so this low from well, this current resistance, this low from when we posted in November. And if you'll notice, the volume point of control is a bit of a vacuum here where nothing went on. So prices can rally into those levels and be attracted to those just to try and make some, fill in some spaces basically. So maybe if I was going to trade this today, I'd be interested in selling into that previous low there, but then I need to have a pretty decent target in order to make the risk reward quite favorable, because my stop loss is actually going above the impulsive candle there that we posted on Tuesday the 20th of December. So risk reward isn't amazing on that, and it looks like we are going to continue to be quite range bound and choppy on that for the time being. Hopefully that was useful on the CAD pairs. Yen pairs. I'm going to move on now to the indices. Okay, let's take a look first of all at Euro Stoxx 50. Let's go back to the daily. So price is holding up quite well here. We saw decent strength again yesterday, bit of a pullback today, only by 0.1% as things stand, so nothing to get too worried about. We've got major support here at 4,020, so I've got this arrow drawing on here. This is where I'd like to see a pullback to, and if we can get some constructive price action around here, I think that could offer a decent opportunity to buy. Let's look at the DAX. Again, decent price action yesterday, holding up quite nicely, still potentially due a pullback, I think. Let's look at the FTSE. That's taken a bit of a hammering today, down by 0.7% as things stand. There may be some constituents in there that are acting as a bit of a weight on that this morning. But again, looking for a pullback into these previous resistance, which now should be support. That's around 76.70. I think at that point it could be a decent opportunity to buy. Let's take a look at these US markets now, because that's where I was most interested yesterday. We can see here this big downtrend on the S&P 500 has been in place for a significant period of time, going back to the first week in January 2022. And we've highlighted this level here, the 4,016 level, and this is basically a level that we're looking to overcome, basically to get above the downtrend, but also take out these previous highs that we posted back on the 18th of January. And yesterday, although we closed off with the best levels of the session, we actually closed above that in a very small way. So that's quite encouraging, and suggests that maybe we are going to see a bit of a pop higher in these US markets, because they have drastically underperformed the European markets for some time now. So if we can get a really conclusive break through this 4016 level, for me, it would appear that the S&P 500 is going to have a decent move to the upside. We've got earnings season upcoming as well, so that could provide a bit of a catalyst for a pop here in the US markets. Let's take a look at NASDAQ. They had a really good day yesterday as well, outperforming actually the S&P 500. As we know, this hasn't really come close to the downtrend line yet, but it is getting there. Really good couple of days in the last 2 days on this market. Potential for potentially a triple bottom pattern on a breakthrough 12,092. So this is the level that I'm watching. If we can get a takeout of the 12,090 level, as well as this downtrend, then that should imply that higher prices will be seen. And I've got targets around here, 13,750 on the NASDAQ, should we be able to break through those levels. So it's starting to look a little bit better on the US markets, but we haven't quite got the confirmation yet. Certainly on the NASDAQ, maybe a bit more so on the S&P 500, which of course is a broader index, 500 stocks, as opposed to the NASDAQ, which has only got 100, and of course very tech focused. Just realized I didn't go through commodities, so let's take a quick look at a few of those. Let's start off with gold. Prices continuing to grind higher. Got major resistance up here around 1971 to 1973. So interested to see if we get any reaction, if prices can get there. Very sharp upward trend. So as long as that continues to remain in place, then we may see higher prices. Let's take a look at silver. That was stalling a bit over the last couple of sessions. So as I highlighted recently, a bit of a range ongoing here with silver. Yesterday, we actually saw a pretty meaty move to the downside, attempting to take out the support of 23.11, and then prices rebounded. But yeah, silver looks a bit under pressure. I think if precious metals are going to have a turnaround, it's going to need to mean that the dollar index is going to have to bounce. And we're going to need to see a bit of a pullback here below these supports. 23.11 is the level to watch, I think, on the downside for silver. If we get a break there, then we could see a pullback. Alternatively, if we can get a break above 24.30, then we do run into a 78.6% fib level quite close by. So there are a number of challenges on the upside that we need to overcome before we can continue to get more excited about further upside in silver. Let's take a look at natural gas. That's a bit higher today, and yesterday posted a pretty interesting turnaround candle, to be honest. We can see here that this candle here, we didn't quite make new lows on the session, but we gapped higher. We held on to those gains, posting a really impressive hammer candle, and we're backing that up with further gains today. And it's not a surprise, really, given how vicious this move low has been on natural gas. So just maybe a bit of an unwinding of the losses that we've seen here. I think we need to see a little bit more confirmation before we can get too excited about maybe buying this as a speculative trade on the upside. Let's take a look at oil. Continues to be trapped in this bearish channel, and we attempted to move higher yesterday through this 87.95 on Brent, but actually closed back below that resistance level and still within this bearish channel. So still got a bit more work to do. I think if we can take out yesterday's highs, then that will confirm that we're breaking out of this channel as well, and then we can start looking for higher prices towards 97.96. Let's take a quick look at crude as well. So we have seen a break of channel here, but the price action has hardly been impulsive and dynamic and pushing higher to the upside to give us enough confidence. I think there is potentially a base pattern forming here, and arguably now I think I need to see a break below above 83.66 before I can get too excited about this. The move through the channel is kind of not what you'd expect or what you want to see if you're going to chase breakouts. You really want to see a big impulsive move higher, and we haven't seen that yet on oil, but worthwhile keeping an eye on that. Okay, I'll go back to US 30 as there's a request for that. Let's go. Okay, so I don't tend to look too much at the Dow just because it's only got 30 stocks in it, and I know they're massive stocks, but it doesn't tend to be the best barometer for looking at stock markets. I prefer to use the S&P 500 when kind of assessing the US markets. But I have to say, the price action here looks certainly much better than it does compared to the S&P and the NASDAQ markets. If we draw the kind of same trend line that we had on the other markets, we can see here that we saw a break long ago on this back in November, and then prices stalled into this resistance here at 34.925 before, sorry, 295 before pulling back. So at the minute, it looks like prices are quite range bound between this period here, 34295 to 32470. But you could also make an argument for maybe a bottom pattern forming here. So this being a left shoulder, this being a head, and maybe what we're in the process of doing here is forming a right shoulder. So if we can get a nice conclusive and impulsive break through these levels, then that would indicate that a bottom may be in place in the Dow Jones, and we can start looking for higher levels. To be honest, it doesn't actually have to go that far to go back up to the previous highs that we saw in January last year. So let's just have a look from a percentage basis. It's I say not a lot, it's 9.8%, but if you compare that to the S&P 500, it's a significantly bigger margin that needs to be recovered to get back to those highs. So the Dow is holding up quite nicely. Okay, let's take a look at Sterling Oz, as there's a request for that as well. Let's bring up the daily chart to start with. Sterling Oz. Okay, so yeah, this is quite interesting. So trading in a bit of a range. At the moment, we can see here the lower end of the range coming in at 174.79. We've seen multiple touch points at that level, so that's a really stiff support level that we're looking for that to hold. And we can see that prices rallied into this kind of region here on a number of occasions between kind of December last year. Well, throughout December, we saw prices rally into that level at around 182.72. So there is potential for prices to continue to remain range bound here, but maybe what I'm increasingly seeing here is that we are in the process of forming a bit of a top. maybe a head and shoulders top pattern. I know we speak about these a lot, but they are the sort of patterns that really excite us because they can be the big turning points in markets where you can get the most bang for your buck when you're taking any risk in financial markets. So in order to complete this pattern, we would need to see a clean break of this support level here at 174.79. If we take a look at price action over the last couple of days, we didn't quite engulf the gains that we made last Thursday, but yesterday we did back that up with some pretty serious losses. And we're attempting to rally a bit today, up by 0.25% so far. So I'm a bit unsure what to do with this at the moment. I'm leaning more towards a bearish bias, but I think I need to see a breakdown through this support level before that will be fully confirmed. That's at again 174.79. Then I'd be looking for a move lower, maybe then a retest of that level before then looking for lower prices over the more medium term. But there definitely was a move to the commodity currencies yesterday, and that is symbolic of a kind of a risk-on environment. So if we do start to see equity markets continue moving higher, then that would suggest that there would be more money going into commodity currencies like Aussie dollar and New Zealand dollar, because they are more associated with kind of risk-on markets. So if we see strength in Aussie dollar, it's likely that it will push this market lower, and maybe we can start looking for lower prices over the medium term. Okay, going to leave it there and move on to the gun to the head trades. So this is where we pick trade ideas live on the video. I will bring up yesterday's trade just so we can have a quick look at that. But first of all, go through the rules of the game. So Steve and I, when he's here, he's back next Monday. We pick trade ideas live on the video as if we had a gun to our head. What would we trade right now? Each of the ideas that we come up with must have stops and targets, and they're all placed at market, and we place them in a live environment now, actually, directly via TradingView to our Oanda trading account. We started off with £2,000 in this account at the start of the year, and we're risking 1% per trade. Not been great for me in the last couple of days, I must say, but that's the way trading goes sometimes. This was my trade idea yesterday. It was an hourly chart that I was looking at on dollar yen, and if you go back to the daily chart, I was looking for prices to remain within this bearish channel and to be capped by this resistance level here at around 130.39. If we take a look at the hourly, we can see that prices did start to move lower initially after I got into the trade, but then they ground higher. More dollar weakness, unfortunately, yesterday. And I did have a stop loss above this level here, these previous highs that were posted on Friday. And although prices didn't really extend much through those levels, they did get me out of the trade, unfortunately. So maybe I needed to be a bit well, a bit cuter with my stop placement on that in order to have had a bit more success. But prices have come basically back down to the entry point on that. But you know, prizes for that, sadly, it was a stop out. So our balance is down at 1944. So not a great start to the year with these trade ideas. We've been doing this for a number of years now, and on a sort of simulated basis, we have noted that our performance has been pretty good. So got enough confidence to stick with it and continue going. And today I'm going to find a new trade. I was quite attracted to these yen currencies that were being spoken about earlier. Obviously, I gave them a bit of time, a bit of airtime on the video. So let's see if there's anything there that's standing out. So we looked at CAD yen, ideally looking for an entry a bit higher up on that one. Let's look at sterling yen. That's maybe a little bit more attractive as we've got some resistance here, but again, potentially targeting entry levels a bit higher up. And the other one was Aussie yen, which I think was maybe a bit more interesting because if we go back to the daily chart, we can see that it is into a pretty significant daily resistance level. We've got these highs in here starting back at the 9th of January. We touched it again on the 18th, again yesterday, and again this morning. So that seems to be doing a pretty good job. And we've got a head and shoulders top here as well on the daily chart, which is kind of at the point where we need to see it work, or we're going to have to give up on that as a theory. So let's take a look at this on the intraday. So this is the hourly chart. We can see these touch points here magnified a bit better. Let's get a trade on here. So selling at the current price of 91.40. And where's my stop loss going to go? Well, I can go ultra tight and only give it kind of 50, 60 ticks. And obviously that will give me a much better risk reward. The volume point of control is here, which is at around 90.51, which doesn't give me great risk reward. So I'm going to have to target something a bit lower. And we have got a pretty interesting and protruding volume node here, so I'm going to target that one. So that's 3.3R. That's a target of around 89.40. So let's get this on. It's going to switch my symbol. Okay, so let's redraw that again. We're going to have a 60 tick stop. And we're going to target and move down to this volume node here, so 3.35. So let's get the sell on, let's get the take profit on. That's going to be at 89.38. My stop loss is going to be at 92.02, and I'm going to risk 1% of trading capital on this today. So risking £19.44. My risk reward is 3.1. Let's get that on and see how Aussie yen does today. So that's my gun to the head trade. I'll get that published up to the TradingView profile as well if anybody wants to check that out and monitor it throughout the trading session. Okay, let's have a look at the data wise today. We've mentioned it early on, but we've got these PMI data points out today. So starting in 28 minutes, we've got the Eurozone PMI index, yeah, it's going to be, well, could be quite volatile. I think on average we get around 20 tick moves on this data point, certainly on Euro US dollar. At 9:30 we've got the UK PMI, and then at 2:45 UK time we've got the US PMI. So it really is all focused on the PMIs today. We've got inflation from Australia overnight, consumer prices, that's at 12:30 UK time AM. And tomorrow we've got a Canadian interest rate decision. So a fair amount going on over the next 24 hours or so for us to be aware of. Okay, thank you everybody for watching. Thanks for your comments and asking for the request to take a look at those markets. It's always a pleasure to do that and interesting to see what you guys are looking at, and hopefully give you some thoughts on how we approach things from more of a technical perspective. I'm going to leave it there. Hope everybody has a fantastic day, and I'll see you again in the morning. Goodbye.